Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, October 14th, 2013. Well, a continuation of the trend to the downside today. The candle we're analysing is this second last candle on the chart, and in bar chart terms this is an inside day, so a candle or a bar we have a lower high but a higher low, and therefore we're not extending the trend to the downside, but the previous trend remains in force. In that prior trend we had a candle making a lower high and a lower low, therefore the prior trend remains in force. We have a small black body candle, and substantially smaller than the size of the black bodies for the previous three trading days, and that suggests that momentum that the sellers have obtained over those three trading days is beginning to dry up, and suggesting a possibility of a change of trend. The size of the body represents the sellers, the amount of net progress the sellers are about to can make on the day between the open and the close, and it says something about the power that they have throughout the trading day in net terms, and today we've seen a lot of that power or momentum evaporate as the market was testing around the 1266 level of support. For the trading day, however, if we look at where the market has closed well below the midpoint level and closer towards the low, suggesting that even though we've seen the size of the body decrease substantially, we have still seen the sellers take control of the market by the close of trading, and it suggests that there still is a good possibility of this market trading to lower levels. I suggest that this area around 1266 has been fairly strong support and resistance in the past, and for the past two consecutive trading days we've seen some rejection from there, as evidenced by the shadows on the bottom of these two candles, and for today's trading as it's developing, once again rejection. So moving forward, that will be a very important level, and I'd like to see a bearish close down below there to confirm that the sellers are back taking control of this market, and if we see that, we could quickly see the market testing to 1250 or beyond. But really I think we need to be quite careful of this market at the moment until we see a solid close down below there. To the upside, however, we do have fairly strong resistance overhead, and for today's trading we saw the market test to the 1290 level, and that has been previous level of support and now is acting as resistance, so that is an important level for the market. Just above there we have the Tenkan-sen trading, so that's at roughly 1295, and then the round number 1300 resistance. So even if this market does rally, there is very solid resistance up above, and it's likely that if we do see a rally, it will be a temporary rally, and then the sellers may come back in and sell the market off once again, maintaining the series of lower peaks and lower troughs that we've seen in this market over the past month or so. In terms of the Fibonacci Extension, and here we've seen the market test once again down below the 78.6% level and be rejected from there. In terms of where the market's closed and the size of the shadow on the bottom, this candle that has finished trading for today, a much smaller shadow, so not as much price rejection from there, and suggesting that there is a possibility of the market still testing to lower levels. But with the rejection here and the market failing to close down below there, it does mean that that is significant. We should be on the lookout for a potential change of trend. If the trend does continue down, then the 100% level at 1253 is an area that we should be looking to. In terms of the Fibonacci Retracement, however, we've got a different picture here. We've seen the market trade through the 100% level two trading periods ago, or one trading period ago, in a moderately bearish manner. And for today's trading, still we've seen the market trading down below there and closing below there for the second consecutive trading day. And this suggests that there is a real possibility of the market testing down to the 161.8% level, which is down at 1243. In terms of Ichimoku, we have a bearish market in all three time frames in this market. The market is trading down below the cloud, so the market's bearish in the long-term time frame. The market's also bearish in the medium-term time frame, but trading below the Kijun-sen, the pink line, and taking off this last part of the price action here, which hasn't completed trading. That Kijun-sen has turned flat, That may be quite important to this market. Quite often when the Kijun-sen turns flat, price action is attracted back towards the Kijun-sen. So let's look for a potential retracement back towards higher levels, and obviously bearing in mind the strong resistance above where the market's trading and standing up to about the 1300 level, but a real possibility based on that there could be a change of trend. But looking at the short-term time frame, the market is bearish by trading down below the Tenkan-sen, and the Chikou span is below the corresponding price action. So it's confirming the negativity that we're seeing in all three time frames, and it suggests that if we do see a bearish close down below 1266, we could see the market testing down to 1250 or even lower.